Hey, Dirk here, just to follow up on the previous video because we have seen a lot of development in the financial world in the last couple of days, and that might change the outlook of what I said in the last video. So in the last video, I was looking at a possibility of potential chop sideways and maybe even more downside in the next, say, couple of weeks. But what just happened is that there was a lot of fear about the US potentially defaulting on their debt. Obviously, in my opinion, something that would never happen. But there has been an agreement that has been reached that actually happened on Sunday where they announced it. They still have to vote for it, I believe. But basically, they made a deal about the US debt ceiling. And what they're saying is the debt ceiling is suspended until 2025. Meaning that there is no debt ceiling, so they can spend however they want. Okay, now without going into the politics and the actual details of all of this, what this means is that this is potentially something that could be seen as bullish for the markets, because now there's no more fear of the US defaulting, and maybe that sends a surge into the markets, especially if it's going to be combined with some sort of stimulus or money printing. So going back to the weekly chart, what we also see here, which is a very good sign for the bulls, is this is the weekly chart and we have the 200-week moving average. And so far, we only came back to test it and it bounced off it. You can see if we zoom in a little bit, it spent just about 3 weeks on top here, but we did not get a weekly close below it and we actually bounced off it. So that is a good thing. That is what the bulls want to see. As long as we stay above this, then there is potential for upside continuation, and we might still get that chop, that sideways chop, but this time we might not actually go below here, right? We might actually hold this as the lows around 26K. Now, of course, we have to wait and see. There's a lot of news that's coming out this week around that debt ceiling stuff and a lot of talks that are going to be held, but so far, so good. And one thing I want to show you also, if we zoom in on the 4-hourly chart, is you can see we still have this channel over here, this range, starting from all the way back in May at around about just over 32,000. We had that big drop and we create a range from that high to low over here. You can see how perfect the middle of the range is valid here at this August high, and again at this February high. We have the deviation below, right? So we got that. So in theory, the rule behind this would be it is still targeting the top of the range, that 32K over here. So we might be in a situation where if this is all favorable and there's no surprises regarding this debt ceiling stuff, that we might actually see some sort of bullish surge in the markets, and I'm talking about the financial markets in general, the stock markets, and as a result also in crypto. It probably means that the US dollar index continues lower. But you can see over here, if we zoom in a little bit more to the current price action, this is the level I want to see it flip. If it can flip this 28.5, so this recent high that it just made, then you can see we have these highs over here that are liquidity. There's basically a lot of stops up here for short positions too. So I'm thinking if we flip this 28.5, there's a decent chance we actually take out all these highs, so we continue higher to 31K and maybe actually even hit the top of the range at about 32.5. That is now starting to look like a possibility. And guys, if you're wondering, yes, markets change all the time, so you have to continue to look at the charts and adapt your strategy or your point of view with the markets, which is what I'm doing here, which I'm updating. So as soon as we got that new information that potentially changes the direction of the markets with this debt ceiling, that is why I'm making this update now and saying, well, maybe we are not going down to that 24, 23, 22 level anymore, because we have this debt ceiling potential bullish scenario. We have a bounce off the 200-week moving average, and there is just that potential that this might be a low. We continue higher here first to run up to that 32.5. That is completely a possibility. So I wanted to make this video to update you guys about that, how I'm seeing it now. The requirement though is I do want to see it flip 28.5. There is still danger for the downside, of course, too. But right now, I do think there is more of a possibility that we actually continue higher and do not go below that 200-week moving average. Of course, it's all about if, then. So if we stay above the 200-week moving average, it becomes more and more likely that we target the top of the range around 32.5. But if we break down below the 200-week moving average and we get a new weekly close there, then the more bearish scenario comes into place and maybe that 22,000 becomes back on the table. So If you enjoyed this video, smash the like button, subscribe to the channel. I would love to hear from you, and I will see you in the next video.